Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
As of now, Taiwan index, Hang Seng, managing to hold on to gains.
The important thing here is the quality of the deal, not the timing of the deals.
President of India, Jagdeep Dhankar, tendered his resignation to prioritize his health care and abide by medical advice.
Support for the Nifty comes in the near term at least at 24,882, which is nothing but the recent low that the index has seen. 25,160, that's the opening bell. 25,150 actually. The Nifty Bank is up at about 57,120. That's about 1/3% higher.
Now, the earnings season has been, mixed at best.
Suddenly, Nifty has slipped into the red as well. Nifty is off 100 points of the day's high as well at the 25,087 mark.
Could be too early to assume that Anup Saha resigned from his position as the MD of Bajaj Finance to go and take over the top job at IndusInd Bank.
Ever since the company reported the numbers, the stock has rallied about 15% plus.
Some recovery from the low, so it's been a little volatile in the last couple of hours. Mid-caps continue to be under pressure, and we do have a lot of earnings. We'll discuss that through the course of the day.
Well, that is the day so far, and actually at an index level, it's quite a boring day. But there is enough and more single stocks which I think are moving. A bunch of them are CNBC-TV18 exclusives, which we will get to in just a bit. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi, Rima, and Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, afternoon, everyone. So I guess, Prashant, you said it. It's all about individual stocks. So you'd have to say that the market has a tinge of weakness to it. And mid-cap specifically, the mid-cap index has been underperforming through the day.
No, absolutely. Before we go any further, guys, as always, let's just, for our viewers, quickly put out the stocks which we are going to put out over the next 60 minutes or so. In short order, you'll hear the first cut analysis of MGL numbers which came through in the last 30 minutes or so. Colgate, of course, came in earlier. Stock's not moving very much, but we'll sort of revisit that one in terms of what's happening. By the way, mid-cap cement stocks are all buzzing. I mean, the Ramco, the Orient, and a bunch of others as well. The mid-cap back is up between 3 and 5%. What's happening? Ultratech, of course. I mean, there's some bullish commentary. Nigel will address that. Eternal remains the top gainer in the Nifty 50 for the second day running. Greater detail with Mangalam sort of coming through in a bit from now. As I said, you've got a bunch of exclusive coming up as well. So what's the story with regards to Bajaj Finance? Anup Saha has stepped down. And, what's the backstory? Ritu will get us that. We, of course, also will talk about insurance. Max Financial, that is Axis Max Life, that's the correct name. That's going to be in focus. But Tilak Nagar Industries, Nigel broke that story on Tilak Nagar with regards to perhaps them being the front runner to acquire Imperial Blue, the liquor brand from Pernod. And of course, then there is Max Financial Services. What I was saying, Yash will get us details on Axis wanting to pick up an additional 10% stake in Max Life. So lots of individual stocks coming up here over the next 60 minutes or so. Rima.
Right on top is Eternal, 11% up now on Eternal, while Swiggy is gaining close to about 4.5–5%. So big boom coming in these platform companies. ICICI Bank, HDFC Bank, the stars of yesterday extend the up move today. Both those large cap banks are up nearly 0.5%. But say something like an ICICI Bank has come off from the highs. Reliance Industries is struggling for the second day in a row. While the numbers were fine, it's just that the stock had run up too much in the last 3 months. So a bit of a give back. Stock is down nearly about 1%. Other losers include, say, Tata Power, that's down on the back of the Mundra shutdown, Adani Ports, Shriram Finance, Eicher Motors, a couple of stocks with cuts in excess of nearly about 2%. But Surabhi, as you said, right, the weakness is getting reflected more in the mid-cap index, which is down about 0.5%. And even the advanced decline ratio has turned in favor of the declining stocks.
That is right. So just some examples of these declines coming in. One is 361 Wealth Management, but that's also because of a couple of large block trades that happened. So 6% down on 361 Wealth. In general, again, tier 2 financial stocks are losing some ground today. Case in point would be something like a PNB, Canara Bank. So that's on the PSU side. There's also, by the way, RBL Bank, which is down another 2% today. JNK Bank is losing about 2%. IDBI Bank is down. So PSU banks are lower. And in general, tier 2 financials, a little out of favor all over again. But I'm just quickly checking the big boys. If you look at HDFC Bank and ICICI Bank, they're continuing to build on the good form. HDFC Bank still up about 7-8 rupees. ICICI Bank also up about 0.5%. So that split story between large banks, money moving to large banks, moving slightly away from tier 2 banks, that continues today as well. Nigel.
Well, that's right. Let's go across to Mitesh Thakkar, who joins us to help us out with how is he seeing trade action set up. Hi, Mitesh. Good afternoon. Market's doing nothing. Absolutely nothing. What's the take on the Nifty Bank? Because that's giving you a 200-point dip, and that's been the one that's leading the way. Would you buy this dip?
Yeah. So, Nigel, on the index, not breaking 24,900 is what, I've been highlighting that levels. Not breaking that is a positive sign, but we haven't got an upside signal or a strong buy signal on the upside. So I think my initial feeling is that we might do some base building around this 24,900 broadly and 25,250, 300 on the upside. And then, we might look at some kind of a break on the upside. So next few days could still be, spent into a contracting manner for the indices. And if it breaks 24,900, then I think another 300-400 points kind of decline could happen on the downside. Similarly, on the Bank Nifty, I think the corresponding levels are slightly lower. We got a low of 56,200, day before yesterday, which is Friday, and Monday also we got a low of 56,250. So that's the first pivot. But the key supports for Bank Nifty are around 55,750. So we might just, amble around between 57,300 to about 55,750 for the Bank Nifty as well. And therefore, both the indices are not giving very strong directional bias. So trading has to be more of a stock-specific kind of, approach.
So what are those individual names, Mitesh?
Yeah. So Prashant, I have a buy on Havells with a stop at 1555. Would look at targets of around 1,600 to begin with, and then once we cross 1,600, then even eventually higher levels can be looked at. And the pharma as a pack has been looking weak, so I have a sell on Aurobindo Pharma, the stop just about levels of 1125 for targets of around 1,070.
Havells buy, Aurobindo sell. So those are specific names coming up. Mitesh, we'll come back to you in a bit, but let's talk about the first one, right? The first stock. MGL reported numbers just in the last hour or so. Sonal is here. Snapshot first for you. Sonal.
Thank you so much for that. Well, Mahanagar Gas, when the numbers were reported, the stock spiked because it was beat on all parameters. If you look at the numbers, revenues in 1976 crore rupees, EBITDA at 485, which compares with 401, margins 300 basis points higher than what the poll was suggesting, and profits higher as well at 324 crore rupees. On a quarter-on-quarter basis, it's a revenue growth of 6%, EBITDA growth of 28%, margin growth of 420 basis points, and profits up 29%. Now, what aided margins this time around, despite the APM gas allocation that came by in this quarter? First was lower spot LNG prices and also price hikes that the company took in the quarter gone by. The raw material costs were flat on a quarter-on-quarter basis despite the gas allocation cut that happened. The other expenses were down 8% as well. But the revenue growth, that was not driven by any volume growth, because volumes, they were flat on a quarter-on-quarter basis, absolutely in line with expectations. It was largely driven by the price hikes that the company took. So Mahanagar Gas continues to be a margin-based story rather than volume-based story, because this growth has come back on the back of price hikes that the company took. The EBITDA per unit also has come in at a multi-quarter high of 12.6 rupees per SCM. It does have valuation support, 12.6 times FY27 EPS, which is the cheapest in the city gas distribution space. So the stock cooled off from the highs, maybe for the reason that it was driven by price hikes, not really volume. So volume growth continues to be a concern for the stock. But overall, if we look from the operational front, yes, it was better than estimates. Yes, valuations are supportive. But volumes are something that management commentary will be required on.
Okay, all right, got it. Thanks for that, Sonal. So Mahanagar Gas in focus. By the way, M&M Finance numbers on the screen. So the profit is more or less in line. On the net interest income, we were expecting a figure of around 1,900 crores. Actually, okay, 2,200 crores. And what has come in is, again, more or less in line. So it doesn't look too bad from the NII and the profit perspective, at least. Disbursements for M&M Financial were a little lower this time around. We'll see. More details coming up in just a bit. The stock is absolutely flat as it digests those earnings. Well, let's go on now. We have Dharmesh Kant of Chola Securities joining in with some perspective on the market. Dharmesh, thanks very much for joining in. A lot of earnings have come in the last 24 hours, and market reaction is also quite interesting. If I look at, for instance, Havells, the quarter was quite bad because of their electrical appliances business and Lloyd and the AC business being weak. But the market is choosing to move on and look at the prospects of a recovery in the second half. Your thoughts on this stock? Anything else? So many numbers, Mahanagar Gas, M&M Financial, all on our screens. Anything else that really stood out for you in the last 24 hours?
Yeah, good afternoon, Survi. Thanks for having me on your show. Havells numbers were a dismal set of numbers, specifically on the electrical appliances side. And the wire and cable was the only silver lining to the space, and so has been the case with other wire and cable kind of companies, where the growth was good and the market expectation is that going forward, since it constitutes almost 35% of the total revenue, it will pull it through, and going into the festive season, even the electrical division would start performing. The only dampener has been the AC segment of the Lloyd's business, which had a slowdown of 30-35%. But net, to my mind, for all the wire and cable, companies, the problem is the input prices will definitely go up in Q2 and Q3 because copper prices are up in the international market. Almost 35% kind of appreciation has been there. So anybody who is looking into this segment just at the 15-17% kind of a growth should be mindful of that fact. Other than that, the other numbers which have been through mostly has been disappointment. To my mind, it was a disappointing set of numbers. A slowdown has been there. And the guys who have performed well, for example, Reliance Industries came out with a very strong set of numbers. But traders chose to book profit out there. But I think it's a very good buy at current levels, given the SOTP-based kind of a valuation based on 2 years kind of a perspective. Ours is around 1650 to 1700 kind of a per share price target. It will get re-rated or revised as and when the clean energy visibility comes through in a type of profitability which is there. PSU banks, I would like to highlight here, if you compare them on like-to-like basis as compared to private sector banks, there has been an asset quality improvement in all the PSU banks numbers they have reported. And one significant factor which has been a diverging factor is that the retail business of all the PSU banks have shown a very good growth, be it Bank of Maharashtra, Union Bank, UCO Bank, or Indian Overseas Bank, as compared to your private sector peers who have shown a slowdown in the retail advances growth. Though the stock prices are correcting in today's market scenario, but I think this is a good time to do some cherry picking out there in the PSU basket space. And there, to our mind, I think Bank of Baroda and Bank of India looks pretty good to us.
Got that. Canara Bank, Bank of Baroda, Reliance Industries also perhaps headed higher, 1650, 1700. This time, the Jio performance was particularly strong, not just in line, but perhaps ahead of expectations on volumes and ARPUs. But let's get to the big CNBC-TV18 exclusive, where sources tell CNBC-TV18 Tilaknagar Industries is leading the race to buy Pernod Ricard brand Imperial Blue. Nigel had all these details. He broke the story. Nigel, fill us in.
Well, that's right. It appears, as per what sources tell us, is that Tilaknagar Industries could be looking at a larger peg, a stiff one, and that could be whiskey. Now, the brand that they're looking at is Imperial Blue, which comes in from Pernod Ricard itself. Now, why is this important? Because the deal size could potentially be close to around 4,000 crores approximately, which on a price to sales basis is not very, very large. It's actually quite a good number. If it's in excess of 6,000 crores, you'll get a little bit more worried. However, the point that we'll be noticing is, out of this 4,000 crores, how much is going to be debt and how much is going to be equity? To raise some money, they've already put it on the exchange over the weekend that they'll be meeting on Wednesday, and there'll be some money that will be raised. So the split of this debt and equity will be important, but around 4,000 crores odd, it looks like quite an accretive acquisition if it does come about. Remember, Tilaknagar Industries, from being a net debt company in the last few years, they become a net cash company. They're sitting on close to around 100 crores of cash. It's going to be important, to track, whether or not this comes through and what does it bring on the table for Tilaknagar Industries. To give you a few numbers, currently Tilaknagar Industries, well, their entire sales, 85% is in South India. They become a pan-India player. Currently, more than 85% of the sales is brandy. They get hold of a whiskey brand which has fairly decent volumes. And on volumes, Tilaknagar Industries sells close to 12 million cases of alcohol. if they get Imperial Blue, then that is nearly around 22 million cases. So scale is what they can get. And that's why, in fact, the street seems to be sniffing this. They've got that verdict in favor of them, versus Allied Blenders. And now this piece of news as well. So year to date, actually, the stock hasn't moved much. It's at the similar price that it was in January. But in the last 1 month or so, the street is sniffing that there could be some potential good news. Dharmesh, what's your view on, this? If it does take place, how do you view the stock? And I think this will be, if it does take place at around $500 million, it'll be the largest that we have seen in the last 10 years. When United Spirits deal happened at around more than $1.5 billion or thereabouts. Your take?
Yeah, Dr. Nigel. I mean, see, the deal looks very exciting. And the fact that it will give Tilak Industries a pan-India kind of an exposure and at the same time diversification to their portfolio from brandy to whiskey. So, and Pernod is a quite renowned brand. Imperial Blue has a good, pan-India market share as well. But the only concern to my mind is the deal structure, how it is they are going to structure the deal, because the balance sheet size of Tilak Industries as of now is around 1,200 crores and equity is only 900 crores. So this 4,000 crores of deal which they are going to do at the valuation, what kind of a debt equity structure they are going to opt for, and how much of the incremental EBITDA which comes through the sale of Pernod brands will get into servicing of the debt part of the Tilak Industries. So overall, from the long-term perspective, if you are looking at say 5-year, 7-year kind of a perspective, one should be a buyer in Tilak Industries. The reason being is one of the cheapest liquor stocks available, around 18-19 times kind of a PE multiple with 20 plus kind of an ROEs, whereas others are far more expensive. So, deal structure is the only caveat, how much debt and equity is going to play into it. But otherwise, my sense is one should be a buyer into Tilak Industries, given the fact that this deal goes on the table.
Okay, all right. It's a busy day for me, Dharmesh. By the end of this week, maybe I'll have to try out a couple of those brands. That said, let's get your view on some of these cement companies. The big boy, UltraTech Cement, they came out with a set of numbers. But for UltraTech Cement, post their numbers, you look at their con call to get a sense of how industry is facing. And we know that the first quarter, is always, it's been a bit of a soft one. And the hope is that things pick up from here on. And going by what they are guiding of a 10% growth on a year-on-year basis, the street is quite convinced that demand is going to pick up. Next up, they're saying on pricing, July prices are little or at par or a little bit higher than June, which is encouraging because it's a monsoon season, right? And in particular, they say that south part as well as the west, the south and east of India, out there pricing has been strong. So that's encouraging as well. Now, they're targeting 212 million tons by the end of this fiscal. But what's giving even more confidence is they're saying they're going to announce another capex, which is telling you they're gearing up for a longer runway. So the street likes all of this. Let's focus on a few stocks. Dalmia Bharat, going by the numbers that we have had, even with Sagar Cement and the others, Nuvoco as well, they have exposure to South as well as East India. And both those two, the pricing has been quite good and both those two numbers have been quite good. So the street is optimistic. Top line growth, not too much. EBITDA growth will be very, very good. What plays out for them is that they have exposure to these regions, which will help them in pricing. And they've been focusing on the cost parameters as well. So both those two will work in their favor on the EBITDA front. However, the problem is there won't be any operating leverage that will play out. So that'll be a bit of a dampener. So that's about Dalmia Bharat, why it's up and about in trade today. Now, UltraTech, they spoke about the South market. They said the South market is getting consolidated and it's good in very good shape. And they go on to say that South could be the new North. Now, that's very, very encouraging because for the last few years, everyone's been optimistic on North India. And the read-through could be that Ramco Cement, well, it could be bracing itself for better times. They've been doing deleveraging on their balance sheet. And now the numbers could look up, which will help them in terms of cash flows as they scale up capacity. And finally, India Cements, the numbers look quite good. The street was a little bit disappointed, maybe on the volumes parameter. But UltraTech Cement has given a guidance on India Cement. And after many quarters, they turned profitable on the EBITDA front, which is good. They're also planning on scaling up the green power, which is renewable energy and WHRS, from 5% to 85%, which will bring down the cost of production and take the EBITDA per ton to around 1,000 rupees per ton. So put all this together, after seeing profit taking yesterday, India Cement has resumed its up move. Dharmesh, what do you like from the cement pack?
Yeah, Nigel, definitely UltraTech Cement. I was speaking to a few of the dealers in South as well as East India. And surprisingly, this time around, South has been very, aggressive and positive as far as the pricing is concerned, and they were able to take price hikes. And the theme which emerged from after the interaction with the dealers was that UltraTech has been able to manage the market well. They have been the market leaders in any geography you talk about pan-India presence. Either they are number one or number two players. Others, they keep on changing from number 2 to number 4, number 5. Like in Bihar itself, this Shree Cement has dropped quite down the ladder with the Damia Bharat as well. So Damia Bharat is supposed to be a East India kind of a cement company, but they are losing market share quite largely. Going by the sense which we got with our interactions is that 10 to 12% kind of a volume growth is very likely. The only thing, the price hikes have to be taken with a pinch of salt, because there's a term called price equalization where, kickback comes in. Almost the entire price hike which they take comes back to them after a month of a lapse through this a price equalization kind of a mechanism. Other than that, to our sense, 10-12% kind of a volume growth is gettable, and UltraTech is consolidating its position fast. Valuation has been a concern. It has always been a higher valuation multiple kind of a company, but going by the way the market leadership is getting, I mean, they are able to consolidate on it. So topic would be UltraTech, and Saga Cement, one can look at it with the kind of a turnaround numbers they have shown. And it's available at around $65 EV per ton. So quite cheap, 20-30% kind of a price appreciation can always be there. So these are the two companies which we are liking at the moment in the cement space.
Okay, that's a firm take on cement. But Dharmesh, before we let you go, we do have to talk to you about food and quick commerce. I mean, that is literally the theme of the last 24 hours, right? And I think the question before investors is Swiggy or Zomato or both or neither. But it's a long wait, and it's not been easy for investors to hang on, wait and see 300 back on the board on Eternal today. Do you like the stock? Again, Swiggy, Zomato, either or, none, what?
Sorry, my take is none. I mean, the reasons are very simple. You will see a tapering down in the growth run rate in next 2 years. There are a lot of competition happening, and a lot of talk was done about tier 3 and 4 kind of a cities, but local vendors and local kirana shops, everybody is having their voice in place, and there you don't need even a Yulu bike. A bicycle can do the job for them. So, I mean, this is a business where the maximum operating margin you can get is 2 to 3% kind of a 5% is the higher side of the margin level. And looking at, say, Eternal's valuation as of now, it's like 3 lakh crores of market cap. And if you discount it at, say, 25% kind of a CAGR going forward, so to attain a 25 kind of a PE multiple, they need to deliver 12,000 odd crores of profitability. That is the PAT numbers, which to my mind in next 5-6 years is very difficult. And most of the profit which is coming in on the PAT level is through the investment book. I mean, 13,000 odd crores of investments is doing the bulk of the lifting for the profitability. So, I mean, for the sake of it, to be in the space, you can still enjoy the ride. It can go up by 15-20%. But I think it will have the same fate as like Avenue Supermarts from 21 till now. The last price, high price has never returned. Though the company has been doing well, they have been delivering numbers, but the valuation will play a catch-up kind of a role. So same is the take on both Eternal and Swiggy. So from our side, it's a total avoid.
Well, lots of numbers and, very good to hear that perspective from you and that explanation as well. Dharmesh, thanks very much for joining us. This is the first of many conversations that we hope we'll have. Thank you very much for being here on the program. We'll take a quick commercial break here. We're going to come back in just a bit from now and, have Rupen Rajguru of Julius Baer talk to us about what he's making of things. But Hormuz is also with us with some unusual movers, the big movers, which we've not sort of touched upon so far. That's coming up.
Welcome back. It's time now for Hormus joining in with, he's at the big wall with all the buzzing stocks at this hour. Hormus.
Now, the good part about data is that it always gives you some new nuggets every single day. Start off with some of the earnings reactions. And first up on the negative side, though, Kirloskar Pneumatic is one of them. And that stock is down almost 9% after its results on very heavy volumes. This is turning out to be the first potential year of negative returns since 2019. It's turned negative on a year-to-date basis after today's fall. And between 2019 to 2024, the stock is up almost 4x during this period. So it's coming off from those levels. Margins took a bit of a hit this time around during the quarter, and the stock is falling on high volumes as well. It's 6 lakh shares traded, a 20-day average of 1 lakh shares. The other negative reaction in earnings today has been Blue Jet Healthcare. Numbers came out just a few minutes earlier. It's locked in a 10% lower circuit ever since. And since then, the stock, though, has 22 lakh shares been traded, a 20-day average of just 3 lakh. But despite this lower circuit, the stock remains comfortably above its IPO price. The IPO price was 346, so still 162%, a handsome return on those numbers. Now take a look at the positive side of the earnings reactions that have come out since then. Look at SML Isuzu. Now the stock, since Mahindra & Mahindra announced its results, the stock is the acquisition, it's up almost 108% from the 27th of April, and from the open offer price, which is 1554, the stock is up a cool 138% from those levels. So another 10% upper circuit today, and that too after some very strong results that the company reported. 163% higher in 2025. The next best year is 2014, which is 172, but at this rate, it will be well on course to beat its best performance since 2003, when the stock was up almost 250%. The other mover in terms of earnings reactions today is AGI Greenpack. And take a look at the volumes here. 50 lakh shares traded already compared to a 20-day average of 84,000. The stock is up 15% after its results that were reported last evening. And this is the best month that the stock has already had in 2025 so far. And the last stock on the list today, and that too is a mover or volume-led mover, RHI Magnesita, is a best single-day gain since May of 2024. This 7.5% move has also ensured that the stock turns positive on a year-to-date basis and has also had 90 lakh shares traded compared to a 20-day average of 1.9 lakh. So earnings reactions are plenty, but then you have stocks like RHI Magnesita doing well on very, very strong volumes as well.
Wow, Hormuz, every time you come in and stand on that wall, you wake us up like that. We're saying Nifty is flat, nothing is happening in the market. Listen to Hormuz, there's so much going on. Fabulous, fabulous. Thank you so much. Plenty of action beneath the surface, right?
No, absolutely. And it's a sampling of what's going on. And Hormuz, thanks very much for that. Rupen Rajguru is with us, Julius Baer. Rupen, good to have you here. Thanks for joining us. I think top of the list for you is still financials, NBFCs and gold finance companies, etc., etc. And why not? We had this, we had a CNBC-TV18 Prime event a couple of days back, and with this gentleman who runs a large $40 billion entity out of the US venture fund. And he said, well, don't fight regulators, don't fight the government. If the government wants something to happen, go along. So in that, if I were to use that analogy here, in the case of financials, the RBI is certainly very, very focused on pushing growth through. There are naysayers who say that, and anyway, forget that. I know your view, which is that you like financials, and this kind of sort of ties in there. What within that space, Rupen, are you most bullish on now? Because things change, right? I mean, stocks have done well, especially even the larger private sector banks after earnings, etc.
Yeah, hi. Afternoon, Prashant. I think as you very rightly articulated, and from an India perspective, and just to add to what you said, while India is a structural story, so what are the 2-3 pockets wherein you can play India? And I think BFSI stands right at the top. And you're right, while last year, from a regulatory standpoint, when things were overheating in certain segments, the RBI, the regulator, came out with a set of regulations to tamper on the growth expectation, particularly on the unsecured loan side. And when probably things are turning, the other way around, the RBI has also rightly acted upon, and now the focus is clearly on the growth side. So having said that, in the current environment, while the large banks, both from the public sector bank and, the largest private as well as on the public sector side, the stocks have done reasonably well. At the current juncture, since now the rate cut transmission is underway, while we are already seeing some NIM pressures which are there, but still the growth has been pretty good. We are positive stance while continues towards large private sector bank, but incrementally we also like NBFCs because purely the NIM compression there will be far lower than the banks. And if RBI wants growth, I think in an environment historically with an easy liquidity and lower rates, NBFCs tend to outperform. And also sub-segments like gold financing clearly is something which we are very positive on the secured lending side. And the other segment which we are positive are affordable housing. So while at the mortgages business, overall the competitive intensity is very high. But in the affordable housing segment, companies which have found its niche clearly are doing pretty well. Their asset quality is holding up, and the growth is pretty robust. So that's the other segment within the NBFC pack is what we like. So just to sum up, we like the segment and certain subsegments on the NBFC sides, gold financing, as well as on the affordable housing.
Rupen, hi, afternoon. The last time we spoke, you also were getting constructive on IT because you thought it would be a good defensive bet. But now Q1 earnings are not matching up, at least for large cap IT companies. All of them have reported negative growth. The outlook is still uncertain for the second half of the year. So what is the positioning now on tech?
Hi, afternoon, Rima. So tech as a pack, while we divide into both large caps and mid caps, so usually, the correlation of performance from a stock market perspective is, related to the Nasdaq movement. Usually, that's the trend we have seen, and particularly, you are right. This quarter, the commentary clearly, while the talk on deal wins have been there, the TCVs are pretty healthy. But the execution on the ground is not happening. The discretionary spending is not happening as much as what we would have liked it to happen. And probably, I think I would say I would not blame the US companies because while currently, the markets are back to all-time high, but still the uncertainty around the US macro remains. So companies out there are taking a pause and not going aggressive on the discretionary spending side. Having said that, purely from a stock market perspective, historically we have seen, particularly on large cap ITs, typically at say 22 times forward multiple is when, if the growth is not very high, that's the time one should take some money off the table. And when it gets into 18, 19 PE multiple, typically that's the time to add into it because of the quality of balance sheet they have, the payout ratio they have, the dividend yields becomes very attractive. So that's the typical range. So to answer your question, till such time we get a clear indication from the growth side, which right now is lacking, I think it will remain in the range. And as I said, between that PE price band, it will become a buy and sell. And that's where we are in today as we speak. Probably we are in the neutral zone because we are in that 20 odd multiple side. So it's neither a buy or a sell as we speak.
Hi, Rupen. Good to see you. And as always, the last few times you joined, you said cement is is making it to your list. And the numbers have been good. Do you think this is the start of further gains out here? Because the sector actually has been quite sleepy. And it's lucky to get away with not too much of cuts in FY25. Pricing was awful. Demand wasn't great. Couple of one-offs as well. How do you approach this theme? And what do you like?
So hi, Nigel. Afternoon. So yes, you are right that cement as a sector last year was probably, so to say, a disastrous year from an overall profitability perspective. And if you just take a step back and look through what was happening in last year, wherein the two large groups were on acquisition spree. So during the entire period last year, the pricing was pretty weak. And so despite no other negative event, the margins collapsed. So the only segments or the stocks which did well till last year was the companies which were either getting acquired or probably the possible candidates because of potential re-rating, and the large, particularly the one set of a large promoter group which has seen a significant re-rating. So the middle segment was getting ignored. So the other companies which are not aggressively acquiring and they were probably not a takeover target, those were struggling. So if you recollect in our last conversation, we said we like that segment and we continue to like those companies which are in that number 3 to number 5 bucket as far as the companies are concerned. And yes, I think you also rightly said that the pricing discipline is coming back. So this is one of the few industry in which consolidation has already taken place, but the pricing has not come back. In fact, if you look through the last 5 years, also the pricing has been pretty, hardly there has been any pricing growth in the cement segment. So that we believe now pricing discipline is back, and hopefully we will not get into the scenario of price cuts. And I think the region which was most affected, which was the south region, is finally seeing a smart comeback. And I think next 2 to 3 quarters, the growth will be pretty good. And hence, cement as a segment we like. And probably the middle segment is where we like, wherein we believe, because that segment had got significantly derated, and there we will see some bit of re-rating.
Okay. All right, Rupen, we'll leave it on that note then for today. Thank you very much for joining in. Good to get that perspective from you. By the way, in the meantime, a couple of interesting updates coming in from Delhi. One pertains to the EV policy. Remember, IGL had taken a sharp knock because the new policy was talking about a transition to EVs very, very aggressively and very quickly. Well, that's not happening. And now it's become official as well. The Delhi government has extended the current EV policy till March 2026 to facilitate wider public consultation. So it's official. That sword that was hanging on IGL, perhaps for the time being, has been withdrawn. The other is a FinMin statement. Again, questions to Parliament that are being answered. Share of unsecured retail loans is relatively low at 25% of total retail loans and 8.3% of total gross advances. This is the government speaking in Parliament, addressing certain concerns around unsecured loans. Some important updates to keep on our radar. Well, on that note, let's take a very quick break. Come back on the other side. We'll, of course, as usual, have Nimesh join in with all the D-Street chatter and then some final trading calls with Mitesh coming up as well.
Welcome back. Well, a couple of stocks actually are catching your attention as we speak. You have JTL Industries. Yesterday as well, there was a large trade that took place. Even today, the volumes are very, very high. However, in the block data, I've not seen any name that's come out there. But the volumes are extremely massive today as well as yesterday. Remember, the past quarter's numbers actually were very uninspiring. However, they've given a positive commentary with the second half of the year. Some part of the street is buying into it. Nuvama's positive on the stock, in fact. But they've scaled down their expectations as well. So volumes very, very high on that one. But it's 3 p.m. today, so let's go across to Nimesh, who's joining in to tell us about D Street chatter. Nimesh, what are you picking up?
Well, Nigel, another lackluster day of trade, extremely narrow range, and it looks like there is a lack of participation as well. When I talk to some large dealing rooms, the feedback is that the volumes have also dried up. Overall activity also seems to be on a lower side in the last couple of days. I think it's all about earnings, and you're seeing big reactions to it. Zomato being a classic example today. In 2 days, it's up 20% on the back of the numbers that they've reported. But the more important part is the reaction to mid-cap stocks in today's market. I was just looking at something like that Blue Jet, and stock is like at 10%. The numbers are not bad. I mean, prima facie, the numbers look quite okay.
Kirloskar and Pneumatic.
Exactly, it's down another 10%. So you're seeing a lot of those kind of reactions to individual names. I think so. Earnings is going to be a big theme to track, at least in the very near future. From a flow perspective, again, a mixed day, a bit on the negative side is what I understand. Surprisingly, there is a bit of selling in the PSU names as well. I'll talk about that in my chatter list as well. Again, I think Infosys will be a big trigger to watch out for tomorrow. Surprisingly, there was a Citi note in the morning. They've removed the negative catalyst on a lot of the large cap IT stocks. So maybe if there is a surprise from Infosys on the upside, you will see a bit of covering as well in the IT names. So that's something to track in tomorrow's market. Technically, 24,500 is a big resistance on the upside. We've been saying this. So net, it's all about earnings and reactions to earnings. But otherwise, it's been a dull day, even from a flow perspective.
Well, that's right. Nimesh, will be interesting, the point you're making on tech, because that's what could be the trigger that the street requires. Yeah. And also, I think Reliance Industries, technically, that 20 DMA is around 50 rupees away from here. Correct. So I think besides the Nifty Bank, these two I'll be tracking. But what about individual stocks?
So a lot of names in the individual basket to do well. The first stock is Zomato. We've all been talking about since morning. Mangalam has explained as to why the stock is reacted 10%, even in today's market. But this move is backed by very strong FI buying, is what I understand. So expect very high delivery volumes in Zomato in today's market. Across all FI desks, there was buying interest today. So that's the first name. The second stock is CPSE ETF. This is surprising. After a long time, some bit of flow interest in a CPSE ETF basket, and that's on the negative side. And maybe that explains a bit of softness in a lot of the PSU bank names in today's market. So a lot of them are part of the PSU ETF basket, and hence there is a bit of softness there. The third stock is GMDC. That's been a rank outperformer in the last 15 odd days. Again, anticipation of earnings could be strong, but for GMDC, the big trigger is the rare earth opportunity, and something which the management may speak about after the earnings call. So that's something to track there. And the last name is Britannia. For second day running, I understand there is buying interest. So a large global fund seems to be accumulating Britannia at these levels, and hence delivery-based buying for the last couple of days, and that's the case today as well.
Nimesh, thank you very much for that. So that is the sort of information which is coming in as far as specific stocks are concerned. Z is down about 5.5% as things stand right now. Vamakshi is here with details. Numbers came out earlier. Vamakshi, tell us.
Well, Prashant, to begin with, we were working with already muted expectations, given that Q1 was a seasonally weak quarter across players, given the shift to IPL-led advertising expenses. And, Z has missed those muted expectations this time around, which is why the stock is reeling under pressure as of now. Take a look at the ad revenues. They dipped by almost 17% on a year-on-year basis. The street was working with a 14 to 15% year-on-year dip. Now, the subscription revenues, which had been growing for 8 consecutive quarters until Q4 of FY25, have also dipped this time around to 0.6%. In fact, when you look at other sales and services, they're also seeing a sharp cut of almost 64%, and that is because there were no major movie releases from Z this time around. So therefore, when you look at the revenues, it's a downtick of almost 14% overall, and it's a 6% miss as far as our own estimates are concerned. On the other hand, when you look at the margins, they've managed to improve by 40 basis points, and that is because the total operating expenses have dipped by almost 14% on a year-on-year basis. So therefore, the company has been highlighting that they have been undertaking cost control measures, and that is flowing through the margins. The margins have come in a tad bit better than what the street was anticipating. The net profit, though, when we look at it on an adjusted basis, keep in mind that Q1 FY25 did have some exceptional items, but there are no exceptional items in Q1 of FY26. But after adjusting for that, there is a decline of almost 7%. 2% on a year-on-year basis. And the decline in the net profit is actually supported partly because the other income for the company saw an uptick of almost 32%. So thereby it is offsetting some of the decline in net profit, but overall can't take away from the fact that it's a miss as far as street expectations are concerned.
It absolutely is. And if you put two and two together, promoters are not getting to increase their stake in the company, at least not through that warrant route. Numbers are bad. What about leadership? What about pulling the company out of the funk? We'll see. But thanks very much, Ramakshi, for getting us the updates on this one. ZE is sliding quite a bit now at the session lows. Okay, let's go back to Mitesh and get a sense of stocks and ideas. Mitesh, your calls, and just throw in a word on ZE as well, because in between there was a lot of excited trading around ZE, you know, when this whole thing was that whether promoters will be increasing their stake or not. Now that's been shot down, plus bad numbers. Just levels to watch on ZE as well.
I think Z started from about 100 or 105 odd levels and then went to about 150. Is now getting into the corrective mode. The bigger bottoms are around 125 to about 120 zone is the support range. So I think Z might actually, test those levels of 125 to about 120, and maybe the decline will be arrested over there. On the stock side, I have an STPT on granules with a stop at 480 for targets of around 468, and a VTST call on Hindalco with a stop at about 685 for targets of 700. Yeah.
Okay. All right. Got it, Mitesh. Thank you very much for that. Thank you for the calls. You have a good evening. We'll connect again with the markets tomorrow morning. Let's go across to Yash, because Yash has got an exclusive for us. It seems that Axis Bank wants to hike its stake in Axis Max Life insurance company. Let's get more details going. Yash, what are you picking up?
Well, Surabhi, rewind, to a couple of years ago. The original plan which Axis Bank had was to acquire about 30% stake. Back then, it was, of course, called Max Life Insurance. Now it's Axis Max Life Insurance. But the Reserve Bank of India back then had given an approval only for a 20% stake. What we've been given to understand from our sources now is that Axis Bank is likely to express its intention through a proposal to acquire additional 10% stake when it comes to Axis Max Life Insurance. Now, why is this another 10% important? Because the moment you cross 25% is when you're classified as a promoter entity of an insurance company. And this another 10% stake which Axis Bank wants to acquire will give the bank the promoter entity status for Axis Max Life Insurance. Axis Bank feels that all large banks have insurance subsidiaries. You speak about ICICI Prudential Life with ICICI Bank, SBI Life with State Bank of India, HDFC Life with, of course, HDFC Bank. And Axis Bank currently is not promoter to one of the insurance subsidiaries, which it wants to achieve. Currently, SEBI is investigating a matter into Axis Bank. This was relating to the first 20% stake that it had acquired. And we've been given to understand from our sources that as soon as that investigation ends, Axis Bank is likely to reach out to RBI expressing the intention to acquire that additional 10% stake. At the current price, this 10% stake could be worth about upwards of 5,000 crore rupees. It could be done through a preferential issue of shares, which will be issued in favor of Axis entities. And that could get that money, that is upwards of 5,000 crore rupees, into Axis Max Life Insurance, which is the life insurance subsidiary. We've written to Axis Bank, we've written to Axis Max Life Insurance on this story. We are still awaiting a response from both parties.
But that's a really important caveat, Yash, that you added. Obviously, this will require the RBI's blessings. And Axis Bank has its own issues that it's been dealing with in terms of NPA recognition. You're saying they've not yet approached the RBI, but they eventually will, right?
They've not.
That's what you're hearing.
That they've not approached the RBI. What I was told by my sources is that they're waiting for the SEBI investigation to end. Once that is put to an end is when they expect to reach out to the Reserve Bank of India for this approval.
Absolutely. Yash, thanks very much. And that SEBI investigation is about, that earlier 20% that Axis bought. I mean, if you remember, there was all that controversy about the price at which it was bought and whether, this was, there was some sort of a quid pro quo, etc. So we'll have more on this as we go along, but there are regulators involved, SEBI first, and then, of course, there's the RBI as well. Jay Bala of Cash the Chaos is with us. Jay, good to have you with us here on the program. Thank you for your time. Will we see a move, Jay? Because at least on the index level, moves have largely disappeared. What is your sense near term?
Yeah, that's right. Thank you for having me on the show, Prashant. We are looking for a print of 25,332 on the Nifty 50 to confirm that the market has bottomed. But the structure is ideal for the markets to drop to up to 24,400 and then resume the uptrend. So watch 24,332. If it's a print is enough. If that were to happen, we can say the bottom is in. The market is possibly looking for Reliance to stop dampening the sentiment. If that happens, there is a possibility that we are looking for a reversal in the markets. Just Reliance needs to just pause falling. Once that happens, things might start looking up.
Hi. Sorry, you said Reliance needs to stop falling. Any key levels on Reliance?
I would want Reliance to hold above 1397, which is the June low. So as long as the stock can hold above June low, this fall will fall within the parameters of a normal correction. So that's pretty close, less than a percentage away. So that's a very strong support in my opinion. So that's the support level I'm tracking for Reliance.
Jay, hi. What are the big bank charts indicating to you? Because contrary to a lot of expectations, at least on the fundamental side, the large bank earnings have worked better for the street. Those stocks have had a good 2 days in terms of reaction. So is there anything interesting you're seeing either on the bank Nifty, any bank trades at all?
Yeah, there's a very interesting setup on the Nifty Private Bank Index. Yesterday's low is very likely to hold. And the price structure is indicating a possibility of banking index scaling to about 29,000 from its current level of 27,000 odds. So we saw SBI cross 837, but it didn't close there. But if that were to happen, I think banking index can offset whatever dampener Reliance is throwing to the market. So and pretty soon, I'm sure Reliance will also join the party, but it's going to be slightly offset by private banks and Nifty PSU banks in the very short term.
It's a stock-specific market, Jay. What about individual stocks? I think you have a call on Manappuram as well as Exide. Normally, I hear a couple of cash stocks from you, and some of them just go rocket. But what's the outlook on both these two?
Yeah, thanks, Nigel. We saw Schneider Electric at fresh 52-week highs. It's still got further room to go. I'm expecting something like 1,100 to 1,400. I have been bullish since the 25th of May. But fresh stocks, when it comes to Manappuram and Exide, I just want to put a note that I find it difficult to find fresh buy candidates. So you might want to allocate much lower than your usual allocation. With that in mind, bullish on Manappuram with a stop loss of 259, possibly crossing 300. And bullish on Exide. It's got a inverse head and shoulders breakout, but it's just consolidating just above the next neckline. And I'm bullish on the auto sector too. If auto sector were to cross 24,200, I'm sure auto ancillaries like Exide, Amara Raja, and TVS Street Chakra will start rallying. So Exide stop loss 370, possibly heading to 440.
Just rattle off the names again without the levels, Jay. There's Exide.
Yeah, 370 stop, objective of 440.
Which are the others? The stocks themselves, the names?
TVS Street Chakra, I'm bullish on it. And even Amar Raja, I'm bullish on it. Mostly auto ancillaries. And the level to watch on the Nifty Auto Index is 24,200.
Okay, auto anks basically on Jay's radar. Just stay with us. We'll take a quick commercial break here. There's the last 10 minutes of trade left. So coming up in just a bit. Back with Jay.
Provisions, in fact, rose almost 94% year on year, which is why you're seeing the impact on the bottom line. Now, this, the bank says, is because of a technical impact, which is linked to a change in its provisioning policy.
NPA classification happens on days past due criteria, and then there is qualitative criteria, which is agnostic of days past due. We have not changed any day past due parameters because they are driven by regulation. The qualitative parameters, as we have previously indicated, we benchmark to most prudent in market on an annual basis.
Axis is down 5%, as you can see.
RBI found that the bank's NPA recognition policy was too lenient. While the bank was compliant with RBI's income recognition and asset classification norms on paper, we understand the regulator felt that the bank's internal policies were not aligned with the spirit of the regulation.
Axis, we were just discussing, after Ritu's story is down another 1%.
Welcome back. Well, the markets have not done too much, but individual stocks, Tilaknagar Industries suddenly saw a big volume spurt. The stock has moved higher. We'll have to wait by to see what are the plans with regard to the fundraising and how they use that money as well. So we'll have to keep an eye on that. But there's a big volume spurt just in the last 15 minutes or so. If we can get a bar up, actually, it'll tell you the picture out there. Let's get back to Jay Bala though. Jay, what about the tech index? Fundamentally, numbers are being missed. But then after that, some of them are saying that the second half of the year will be good. And actually, some of that is getting bought into. I recall, Tata Technologies is one stock that did see buying post its numbers and a couple of other names as well. How is the chart looking on the tech index?
Yeah, I've been quite skeptical on the tech index, but the move from the April low has happened in 5 steps. 5 steps usually signal a trend reversal, but there are haunting possibilities. But I'm still skeptical on the tech index, but I'm not bearish. So as long as 36,200 to 35,200 holds, the tech index can reverse from here. Infosys, it's got again a similar structure to the Nifty IT index. It's got a 5-step move from the April lows. So if Infosys manages to hold above 1518, that's quite bullish. And since the expectations are quite low, there's a possibility that we could get a surprise. So if the Nifty IT index crosses 40,000, things can start getting really bullish, and I might have to revise the consideration that I've had for the last few weeks that it's a counter-trend rally. I might have to turn more bullish on it. And even as things stand, I'm not bearish, but just more neutral to taking this as a trading rally more than an investment rally.
Okay, some more stocks which are moving up. MRPL came out with numbers yesterday. There was a big loss. The stock corrected. It's bounced back 4% higher on that because brokerages say that Q1 was impacted on account of shutdowns, a near 45-day shutdown. But Q2 should be a lot better, and that stock is seeing a bit of a rebound. M&M Financial, which just came out with their numbers as the show started, is up nearly 1.5%. In-line numbers largely. Gaurav is telling us there is a NIM expansion, net interest margin expansion of 20 basis points on a quarter-on-quarter basis that the street must have liked. It's pushed the stock higher. The credit cost too has seen a bit of a spike. And remember, Paytm comes out with numbers later today, and Paytm is up nearly about 4%. Generally, all platform companies are higher. Swiggy and Zomato, Eternal, but Paytm too, ahead of numbers, is seeing a lot of interest. Jay, any thoughts on Paytm, the stock that we just discussed, or anything in the NBFC pack?
Yeah, I was contemplating coming up with a pick on PB FinTech. I liked it today, but it was slightly. I was slightly hesitant on it because it was not a very clear structure. But if yesterday's low holds for PB FinTech, it might try to push for fresh 52-week highs. So keep track on that. Paytm has got a very strong momentum, and I'm sure the next pullback will be bought into. So the risk reward, although is quite wide, currently trading at 1,059, the stops are about 900. So that's the downside here. So if a pullback could help and could bring the risk reward much better. So one more sequence of high pending for Paytm.
Any cement stocks? India Cement's up 7%, Ramco, Shree Cement, KCP, Digvijay. Across the board, stocks are flying.
Yeah, I've been bullish on cements, and I've been pointing out for quite some time that cement stocks are likely to do well, and it's got a spillover from Nifty Realty Index. So right now, pay attention to ACC, and likewise, ACC has got an interesting breakout, but the risk rewards aren't there. Otherwise, I would have picked it as a stock for a pick today. It's got Ambuja Cements hasn't got a similar setup. But Shree Cements and even JK Lakshmi Cements, they're all looking quite good. But they've all moved. Now, I've been bullish since early May, mid-May. So it's a bit late, but the rally is still there. There is still strength in the cement space.
Absolutely. By the way, Nigel was mentioning Tilaknagar. Any thoughts on this one? It's basically it's back at highs, right? Or has it? I think these are new levels, new high levels. January 25, the stock had gotten to about 457. It's at about 473 now. But I mean, technically, Jay, I don't know if you have a view, but there's a deal here, perhaps, and we'll have to wait for the contours of that one, which we reported. Jay?
It looks quite bullish, ultra bullish, I would say. But stop losses are placed about 330, 340. So not an ideal risk reward. But yeah, it looks quite bullish. Momentum is very similar to Paytm. I would say, in fact, I would say it's slightly more bullish than Paytm. This probably has got two sequence of higher high on the weekly time frame, not on daily time frame. So, so it can get really bullish. Say something like 800, it can even close to doubling from here.
Oh, wow. Okay. Well, I think, Jay, just hang in there. We're going to come back to you after wrapping up markets, right? 1,600 stocks down, about 1,240 stocks higher. That is the overall NSE declines to advances ratio. On the Nifty, there was one Eternal and then everything else far down below. Eternal up 10-11%, and the next gainer was up 1.5%. So no real comparison there in terms of what went on. So the other gainers were HDFC Life, Hindalco, and Titan, all in the range of 1 and 1.33%. On the downside on the Nifty, there was Shriram Finance down, actually 2-3 names with 2% cuts. Shriram Finance, Aishur, and Geo Finance, which lost a little bit in terms of trade. Pretty, flattish, sideways, drifty kind of close across the large indices is what we've had. Rima.
Okay, Sam, in the mid-cap action, Eternal, of course, higher. Swiggy moved up. Swiggy ending with a gain of nearly about 6%. GMDC spiked. AGI Greenpack reacting to numbers, 14% up. Tilaknagar, we've been talking about it. That's been a big mover. Stock higher by nearly about 14%. But on the way down, Z Entertainment post numbers took a hit. 361 WAM after the block deal under pressure. And a couple of these mid-cap banks, so PNB, RBL Bank, IDBI Bank, all on the back foot.
Okay, today not a great day for financials overall. When the PSU banking index has actually been among the weakest. And not just that, a lot of the other NBFCs, other financials as well, for instance, Geo Financial, on the weaker side today. Overall, a weak day for mid-caps. No denying that. Some of the names which have lost ground would be a Blue Jet Healthcare after numbers, as we've seen. Zeev, of course, we've mentioned, down about 6% as well. So a bit of a tough session, particularly for the broader market. The Nifty once again below the 25,100 mark. Well, that's where we take your leave on this edition of Closing Bell. Many thanks for being with us, but do stay tuned because all the market action continues. Up next is Markets Forward.